The North American stock markets have had an interesting year so far. It's been a roller coaster, with ups and downs keeping investors on their toes. Right now, things seem to be looking up. Both the S&P 500 in the US and the TSX in Canada have bounced back from a dip earlier this year. That's good news for anyone with money in the market. However, don't get too comfortable. Experts predict more volatility in the coming months. The recent rebound is largely due to strong company earnings and some positive economic data. It seems investors are feeling more optimistic. But remember, the markets are always forward-looking. Current events are important, but what really matters is what's coming next. Overall, the markets are showing signs of resilience. The first quarter of 2025 had its share of challenges, but the underlying strength of the North American economies is helping to keep things afloat. Several factors are shaping the North American stock markets. Politics always plays a role, and this year is no exception. The recent Canadian federal election has injected some uncertainty. The new Liberal minority government has its work cut out for it. They're promising fiscal stimulus, tax cuts, and infrastructure spending, but they also need to balance the budget. On the economic front, there are both positives and negatives. The U.S. economy shrank slightly in the first quarter of 2025. However, consumer spending and business investment remain strong. Canada's economy is facing similar headwinds. Growth has slowed, and the Bank of Canada might cut interest rates to boost the economy. Trade is another big issue. The ongoing tariff disputes between the U.S. and its trading partners are creating uncertainty. The markets hate uncertainty. This is something investors are watching very closely. Predicting the future of the stock market is tricky business. But by looking at the key factors at play, we can make some educated guesses. The big question on everyone's mind is, will the recent market rebound continue? Central bank actions will be crucial. Both the U.S. Federal Reserve and the Bank of Canada are expected to cut interest rates in the coming months. Lower interest rates make it cheaper for businesses to borrow and invest. This could provide a much-needed boost to the economy. Trade negotiations will also be critical. A resolution to the ongoing tariff disputes would be a major positive for the markets. On the other hand, an escalation of trade tensions would likely send stocks tumbling. Finally, keep an eye on corporate earnings. Company profits are the lifeblood of the stock market. As long as businesses continue to grow their earnings, the outlook for stocks remains positive. So, what does all this mean for investors? First and foremost, buckle up. It's going to be a bumpy ride. Volatility is the name of the game in 2025. Don't panic if the markets take a dip. Remember, short-term fluctuations are normal. Second, stay diversified. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies. This will help to reduce your overall risk. Third, focus on the long term. Don't get caught up in the day-to-day noise of the market. Remember your investment goals and stick to your plan. The stock market has always gone up over the long term. There's no reason to believe that this time will be any different. Finally, don't be afraid to seek professional advice. If you're unsure about what to do, talk to a financial advisor. They can help you create a personalized investment plan that meets your specific needs and goals.